So hello everyone. Uh, Today there is a implementation of the concept whatever we have learned as part of level one. We are going to uh, you know directly implement them into the live market, and that is what I promised. So maybe just to save the bandwidth, I will stop my video. Okay, and I'll share my screen. Okay, so what we are going to do today, I have created a kind of a some checklist, or I can say decision sheet. And based on this decision sheet, we are going to take a trade. Can someone confirm if I am audible and you can able to see my screen?
Yes, we can.
Okay, thank you. So yeah, so this is the decision tree, and I request you to, I mean, have some patience because whatever I have created, it is like considering anyone who has going to take the first time trade in the in life. Some of you might have already taken some of the trades, so you might be already aware of some of the things are habitual. But what I'm starting is that anyone who has not taken any trade, so I was going to explain the very step by step, and over the period of time, once anyone is little bit familiar, I mean, they can do all these things in the mind rather than putting some checklist or decision tree. So it's like we are going to write alphabet A first time in life. Okay, so after maybe, but if I will ask you to write today, you can even write by your closed eyes. So this one, just treat it as a we are in a kindergarten and first time writing the alphabet. Okay, so what we are going to do. So I have one checklist that I'm treating as a taking naming as a decision tree, and there are some parameters that are based on that we are going to take the decision. At the same time, I have also created a kind of an Excel sheet where maybe you can. I will share this both the Excel sheet and the decision tree with you all. So by using this checklist, we are going to uh, decide certain things. Certain things means either that for that particular day or that particular time frame, what is the as per the concept, what you should do. You should buy the stock or sell the stock, or maybe hold your position, or maybe do nothing. So there will be only three possibility: either buy or sell, or just do nothing, right? So before taking something, maybe the current one, because the market is closed this point of time, so we'll do some exercise based on some historical data. So maybe if you have any stock to suggest where we can do the practice, or maybe I have just chosen some generic stock of Tata Motors, and which is again the very known, very popular stock, and we can just try implementing our learnings in this Tata Motors stock. Okay, based on this decision tree and the Excel sheet. Uh, right. So I'll show you that. Okay, what are the things that we are. So in the decision tree, there are first what we are going to do that. So we're going to select any time frame. Okay, so maybe I will select some time frame, a random one. Maybe I'll go somewhere in the past, and then maybe some date, uh no maybe somewhere in February, some date I will choose. And my time frame as of now, I'm just looking at in a daily time frame. Okay, just to start with an example. So this is a daily time frame chart, and the time frame I'm choosing is the uh, maybe the February 2020. Okay, so 19th February 2020, and if I go to that particular candle, so maybe I'll just mark that particular candle for your reference purpose. And okay, why is not selecting? Yes, selected now. So the candle, not this one. So this is the candle, I marked it. So for time being, maybe you just ignore the whatever is the right side. So maybe for your benefit, which I'm saying that okay, whatever you can see, that will be the candle. Okay, so just ignore whatever is the right hand side of that mark candle, and we are focusing on that particular candle for our implementation of the concept perspective. So this particular candle we are focusing. Right. So considering this particular candle, let us look at the decision sheet, and accordingly, whatever decision sheet is saying, we are going to take the decision accordingly. So the first one, whatever we learned that okay, we are going to check the double screen trading system. Okay, and it is as we always discussed and learned that okay, we are going to trade in the direction of the trend, right? So to identify what is the trend, we are going to do the certain checks. So first thing that we need to check the tide in the higher time frame. It should be weekly or monthly time frame. And in that time frame, we are going to look at what is MACD or TI. TI is nothing but a trend indicator. Was what MACD or trend indicator is telling, right? So as per this trend indicator, MACD says that if MACD or TI is uptick or flat after down, then that means trend is up and the decision should be buy. If TI or the MACD is down tick or flat after up, that means trending down and the decision would be to sell. So let us see that okay, as per this concept, what is happening on that particular time frame, right? So daily is the time frame which we are going to trade, but to look at MACD or TI indicator, we need to go in a higher time frame, either maybe monthly time frame or weekly time frame. So let us know one higher time frame. I'm selecting here the weekly one. Okay. So where is my uh, the mark candle? Okay, so this is my candle, and let me bring the indicator MACD. Okay, so remaining, I will just remove it from here. So this is the weekly time frame, and then based on the MACD, the concept that we have learned, what is the MACD saying? So the same time frame, if you mark that particular instance in MACD indicator, so it will be something. Okay, so we need to observe what MACD is saying. Okay, so what we learned that MACD, if there is a positive crossover, that means the blue line is crossing the red line in upward direction, that is a positive crossover. At the same time, if blue line is doing the negative crossover, that means crossing the red line downside, that is a negative crossover. So if you look at here, it is uh, doing the negative crossover. That is blue line is doing the negative crossover with the red line. And as per the decision sheet, it is that if it is a MACD or TI is down tick or flat after up, that means it is the trend is down. Okay. So, and here it is down tick. It has already crossed the red line. It is the direction is in the towards the down. So as per this decision sheet, it is this decision point. It is giving the signal of a sell. Okay, and same thing we need to indicate into our Excel sheet for taking the decision. So we are taking the multiple decisions, and once we satisfied with all the decision, accordingly we'll take the trade. So just for our reference, maybe we'll start with okay, what is the date today? Maybe we can just a trading log we can maintain. So this is 27th of April 2023. The stock that we have selected is Tata Motors, and period. I mean, close of period is daily or weekly time frame, whatever the time frame. So we are maybe the trading that we are not sorry. Close of period is that what is in that before date, what was the basically the price chart is saying. So that was the so
Shouldn't
before
we put the date as the date which, Sachin, the date should be the date
correct.
on which you have marked that vertical line.
Right. You are right. So it should be the date of the date we are taking the trade. So basically, we are taking the back date trade. Thank you, Manisa ma'am, for reminding about this. So this is a trade of 2020. So because we are looking at the past data. Oh, sorry. What is happening? So yeah, and then so basically this is the time frame basically. So maybe we are doing the trading in the daily time frame, for example, in okay. So we'll be marking it as a where is then go to 90. So this is just for our internal reference purpose. We just making that creating the trading log. Okay. And now the double screen decision. So as part of the double screen decision, we have um, evaluated the tide, that is MACD, and as per the MACD evaluation, it is saying it is giving a sell signal. At the same time, we also need to evaluate what is the wave is saying. Okay, so wave signal can be evaluated based on the oscillators, and we know we learned two type of oscillators. So once MACD decision is done, we can remove the MACD and we can add the oscillators. And there are two oscillators we learned, that is RSI and stochastic. So these two indicators I have added. And then, so only the MACD we need to observe in the higher time frame. Okay, after the MACD observation is done, we need to come back into the current time frame where we are taking the trade, and that will be a daily or lower than that. So as of now, I'm selecting the daily time frame, and in that time frame, the RSI and stochastic we need to observe. So stochastic by default it will be 1413. We need to maybe just for the smoother rendering or representation, we can make it uh, smooth as a 3, so that this rendering of stochastic will be smooth. And we need to observe the same thing. Okay, what RSI and MACD are indicating. So I'm just selecting the vertical bar separately and putting it here. It is just for understanding purpose. In reality, you don't need to do. Okay, so RSI at that particular point is, if you can say, either is kind of a down tick or maybe the flat. Okay, after a fall. So after a fall, it is coming as a flat. At the same time, if you look at the stochastic, it is a clearly down tick or negative crossover. That means the blue line has crossed the red line in a negative direction. So in the wave one, or in the wave also, it is giving the sell signal rather than the buy signal. Uh, right. So both the double screen system is indicating the sell. So here I will put the double screen decision as a sell. So hope I am clear in with this point. MACD I checked with first MACD in the higher time frame, that is a weekly one, and because it has shown the negative crossover, that is the sell signal. And RSI and stochastic, these are the two oscillator I need to check, and oscillators are also giving the sell signal. And based on this two decision point, which is called as a double screen system, and both are indicating a sell signal. So the my first level check has been done. Second thing, what I need to check is Okay.
Didn't you do three checks, Sachin? The first you
Ha,
did MACD, then you did the store, and the
correct.
third you did RSI, like two oscillators and one wave.
Ha, right. So so oscillators is again I'm oscillators together it is treated as a one. Okay, so our RSI and stochastic both are oscillators. So even the individual, I can say indicator wise, we have checked three things, but conceptually it is only two things we have checked. The one is they call the MACD or is called a trend indicator. So if you remember the concept, maybe I can quickly just just for the quick revision perspective, I can just
No,
show
no,
it.
I don't want you to get deviated. That
Right.
is, no, no, don't worry. I
It is
think you
basically
go
the
with your
MS,
flow.
yeah, MACD is one, and oscillators or RSI and stochastic both together is called as oscillator. So our oscillator has a two part, RSI and stochastic. Uh, okay, so this is
Yeah.
treated as a combined one. There is a third decision
Okay.
which sometime we need to do to refine the entry or exit, and it is mostly applicable in the day trading scenario. So in the Tata Motors, I'm this one I'm treating as a be a normal maybe a positional trade rather than a day trade, and that's the reason I'm not going into the lower time frame. Otherwise, I mean, we will look and into one example where anyone wants to do a day trading, and in that condition, there can be a one more, checking of the lower time frame can be done. Okay, so as of now, in this example, the two checks or the two screen system is enough, tide and wave, and whatever that combined signal we are getting based on these two checks, we can put an that entry that conclusion against that. So far we got the sell signal. Now the third thing we need to check is the candlestick pattern, and I think this is the first concept we learned about candlestick patterns. So either main thing is to check either that particular candle is bullish or bearish. Okay, so if it is a, I mean, bullish candle, then we need to check, I mean, any one of these combination candle, it will be a bullish, otherwise bearish. So if you look at the chart, okay, so this is the daily time frame chart. I'll just look at, maybe I'll just remove it, mm, just so that we can able to look into the candle properly. I'll just keep that. So this was the candle we are talking about, 19th of February. And if you look at the candle, if you zoom it, it is the clear um, bearish candle. Okay, there is no, I mean, single daily candle in daily time frame. It is clearly indicating that okay, this is the bearish candle. Okay, so and bearish candle means it is giving the indication of sell signal. If you look at the decision tree, so if you find the bullish pattern by looking at any of these candle, it should be a buy signal. Or if we find that particular candle is any one of these candlestick pattern, that means it is giving a sell signal. So as per the chart, that particular candle is a clearly a single clear bearish candle, and that is the reason for the candlestick pattern. We will again mark it as a sell signal. Next thing that we need to observe is the volume. Okay, so what decision sheet is saying about the volume? So volume on most significant candle. So here, what it mean by the most network issue? Hello. So looks like there was some network fluctuation, and because of that, can you confirm if you can hear me properly? Because I think temporarily I got disconnected.
Your voice is breaking, Sachin.
Okay. So looks like again today is some. bad network. Um, is it better now?
It is better now.
Okay. So I was
It has
mentioning.
improved.
Okay, thank you. So I was mentioning about the volume. So volume on the most significant candle is that the candle we are looking at. Okay, so sometimes the most significant candle it varies. Sometimes where the
A
candle.
screen share is not happening and your voice is breaking.
One second, screen sharing. I uh, just give me a second. Uh, is my screen visible now?
Yes, we can see it now.
Okay. Sorry for the interruption. That a network issue.
I'm just worried about one thing, Sachin.
Mm-hmm.
Our other participants have not joined today, and we are doing this important thing.
Yeah,
Do you
so I
know?
mean, I think they joined, but maybe some of them. I'm not sure if everybody is facing the internet issue.
No,
But
actually, from beginning today we had about three, four. Now we have only
hmm.
three.
Okay,
Um,
so that's
so
okay. I mean, let us count because this is the first example, and we will be having few more examples in similar way. And
okay,
recording is also happening. So I'll share the recording and maybe a similar example we will cover different type of example in different stocks so
yeah,
that it
fair,
will
fair.
be a
Yeah.
more
Anyway, there is a recording shared. Fine.
correct,
Yeah.
right. So the volume perspective we need to look at the volume for on that particular candle. So there are two ways to look at the volume. So first of all, if volume is indicator is not added, we need to again go to the indicator toolbar and we need to add the volume. And once volume is added, we need to see that how is the volume on that particular candle. Okay, so it there is a daily, right? So this is daily, and this is again the daily time frame. And okay, so either we can check the volume on that particular candle, or sometime the most significant candle is also treated as the wherever the negative crossover is happening, where this is started. So in this example, if you look at uh, the same candle where no, no, not same. This was the 19th. So this is the basically the 19th uh, April candle that we are looking. And this is the bottom. You can able to see that okay, this is right candle was selected or not. 19th February 2020. So on that particular day, if you look at the volume was also higher than the average volume. Okay, so so either we can select that particular candle for looking at the volume, or sometime also we need to look at which candle the negative crossover is happening. So if you look at the stochastic, okay, till the current the date of the trading, that is 19th Feb, the actual the crossover happened maybe two candle before. So maybe this is the candle of 18th and this is candle of 17th. So either of one candle we can verify and check from the volume perspective also. Okay. So but in this example, the same candle, the same day candle is showing the good volume. Okay. Okay. So that is again in our favor. Okay. So whatever the trend is so far, it has um, predicted or prediction as given by the these checks, we can continue that volume is also supporting that particular decision so far. Okay, so red candle with heavy volume more than average last few days. So from the volume perspective also we are getting a sell signal and we can enter the sell. Next part, we need to check the EMA. So here, this is the maybe the stock, and I think Manisha ma'am, there was a great question when we were learning about the MA and EMA, that which one is to choose. So now, in the stocks or in general, I mean stock. Let us say the example of stock only, the equity, and Tata Motors is equity, not commodity or currency. So we are checking the EMA value rather than simple moving average or moving average. And what we need to check in EMA, that is, so if it is 5 EMA PCO means the positive crossover with 13 or 26 EMA in last three period candle for a buying signal. Or for saddle signal, it should be a negative crossover by 5 EMA with 13 or 26 EMA. So let us see what is happening in the chart. Okay, so the EMAs, again go to the indicators, and from there we can add uh, exponential moving average maybe three times, and it is in my chart it is already added, so I'm not adding that. And here we need to customize it. By default it will be a 9 length, but we need to change it for the 9 to 5, 13 and 26. So we need the 3 EMAs, the 5 EMA, 13 EMA and 26 EMA.
Somehow the screen which the screen which I can see is the table screen, not the graph
Oh,
screen.
okay.
Is that
Let,
intended?
no, no, no. Let me share the screen too. Um, is that screen chart screen visible now?
I can see chart on. No, not chart. The table, the decision table. I can see. Yeah, now
Okay.
I can see chart.
I can see chart. Okay.
Yes, I can see chart.
Okay, great. So, so what I did in last 30 seconds, I have added the EMA from the again the indicators menu bar, and those indicators I changed it to 5, 13 and 26. So this is also we learned that okay, as part of level 1, we are using this EMA, and typical values are 5, 13 and 26. And as per the decision sheet, what we need to check, either two possibility. We need to check either is a positive crossover is happening or negative crossover. So positive crossover scenario, that 5 EMA is doing the positive crossover. That means 5 EMA line is cutting the 13 or 26 in a upward direction. Or negative crossover, the 5 EMA value, the line is cutting 13 or 26 in a negative direction. So in this example, the okay, let me change the color of the EMA maybe for the better understanding. So 5-1, maybe I'll just taking a, let's say the pink one, a 5, 13-1, maybe I can say the purple, and the 26 as a maybe more darker as a blue. Okay. So if you look at the pink, which is 5, it has already done the negative crossover with 13 and 26 before reaching out, before this candle where on the date we are trading. Okay, so that means negative crossover is has already happened, and that is also giving a sell signal. Okay, so the third point is moving average or the EMA. It is giving again a sell signal. So in our decision sheet, we again against the EMA, we mention a sell. Now the next important is the chart pattern. Okay, so there are certain decisions that we learn that depending on the chart, there are some bullish chart pattern and the bearish chart pattern. And what are those? So for example, these are the bullish chart pattern: inverted head and shoulder, or double bottom, or rounding bottom, or cup and handle, breakout of the flag, or breakdown. So these are the example of bullish pattern. And then uh, and the bearish pattern, again the head and shoulder, double top, rounding top, okay, breakout of the flag, or fake breakout. So if we see the current chart, I mean, so chart pattern, again, it is an added advantage. It may or may not be possible. So if I'm looking at the daily chart, let me remove the other lines. Okay. So, and another recommendation is we can also, if no chart pattern is found, check in the higher or lower time frame as well. So if I zoom in the daily time frame, um, so far there is no a very clear cut chart pattern. Maybe in here a kind of, we can say, head and shoulder chart pattern. But again, I mean, we learned that, okay, head and shoulder, if found, maybe the top of the trend, that will be the most effective one. So we can, if we don't find any chart pattern, we can ignore it also. So the main double top or double bottom or head and shoulder or inverted head and shoulder, if those chart patterns are clearly visible, then we can take the advantage. Otherwise, maybe we can, ignore the chart pattern also. So in this example, there is no clear. One clarity is there, a kind of a head and shoulder here it is making uh, and but it is not at the top of the trend, so we are not considering that particular chart pattern. Okay, so we are just leaving that. Next one is that the Fibonacci retracement. Okay, and for Fib retracement, it is recommended to observe if it is the only for the continuation pattern. Okay, so continuation pattern is, we know that is the flag and pole over the continuation pattern. And in this example, again, we can't see any continuation pattern. So at this point of time, fib retracement is not also applicable for this particular example. Then next one, what we can check is the divergences. Okay, and in the divergence scenario, especially the top or bottom fishing. So top or bottom fishing is that if you wanted to sell when the stock or the chart is stating at the top of the trend, or maybe it has made the bottom. So in that particular scenario, like divergence is kind of a most applicable. Okay, so okay, so that means that stock price is moving up and up, but the oscillators are not giving the supporting a similar way, or the other way is that stock is falling, but oscillators start giving the divergence, because I mean, by not following the chart, not following the price fall, but it started moving up. Okay, so in this example also, it is not the top of the trend, it is somewhere middle. It is not the top and neither the bottom, so it is somewhere in the middle. Okay, so in the current one, we can also ignore the divergences part. Next one is which is again the most important, and it will be always be a most important based on my experience, and that is the support and resistance. So we should be having a good practice of marking support and resistance. So the seventh point says that, okay, immediate support for stop loss. Okay, so at what basis? So okay, so if it is a kind of a bullish bullish one, then we should be looking at the immediate support, and if there is a bearish, then we should be looking at the resistance, right? So far, all the indicators whatever we have learned, it is giving a sell signal. And in the example chart pattern, I can say not applicable, fib retracement not applicable, divergence is not applicable. So we need to find out the immediate support for bulls or immediate resistance for bear. So these, either of them, it is needed for our identifying our stop losses. So because uh, so far it is giving a sell signal, and that means it is not applicable. Bull market is not applicable. Only applicability will be the bear market or maybe the side. So the further analysis will tell if there is any sideways symptom we are getting. But so far it is the sell signal we are getting as per the analysis so far. So to have the stop loss, we should be looking at what is the immediate resistance. And for that purpose, we need to go to again look into the chart. Okay. So maybe there are some I just removing the line, and so that we can put our own fresh support and resistance. So we are trading somewhere here. Maybe just for the better clarity, I will go to the little bit historical way, maybe in a higher time frame to mark the support and resistance in general, right? And what is the so as of now we are here. That is 20. Okay, so this is the weekly chart I have selected. Because of that, you can see there is a change in the date. Okay, because weeks start on the Monday, so that particular day might be a Monday. Because of that, it is showing the different date. When I switch back to daily time frame, it will be by default. It will select the 19th of Feb time frame. Okay, so here the support and resistance we need to mark. I just clear everything in the chart. So the major support and resistance we need to mark. So we need to go to this horizontal line, and based on the past performance, maybe here is the first top resistance I can say, and then next resistance maybe somewhere here, because there are the other kind of level where the price touched that particular point and came down. Okay, so these two will be the major resistance, right? From the top. If I come down further, so few more resistances could be based on this past two data. Maybe this is the under resistance, and then after that, if you look at this point, this is also showing a kind of a resistance. Next one will be looking at these two peaks and the recent peak maybe, and the resistance point could be this one. So while putting the support or resistance, we just need to kind of practice that those support or resistance line we need to put as such a way that it should capture or it should touch the maximum number of points. Okay, so either the same thing applicable for the support as well. And because this now we are looking for the immediate resistance, and that's the reason we are focusing on the resistance line rather than the support line. So if we look at this example, the nearest resistance is this particular price point, the last one. Maybe I'll just change the color of this particular resistance line, and then maybe I can move the time frame to back to the normal, that is the daily time frame, after my support and resistance has been marked. If I miss the date, I will just use the go to function and come back to the same. Okay, so in a way, this particular line is giving a stop loss or the resistance line. Okay, and whatever will be the value, we can uh, maybe write down that value. So immediate resistance. So at per the immediate resistance, what is the price point it is showing? So price point, maybe it is 191.85, or maybe we can say 190, 192 to be a round number. So that will become my stop loss, because so far I have whatever the decision it is showing as a sell signal, and in that case I will wear the bear hat for that particular day, not a bull hat. So, and this is 192, I got a kind of a stop loss value based on the based on the resistance. Next point we need to consider is what is the major support, and that will be applicable for bear, and the major resistance for bull. So resistance is not applicable, then I will put it as not applicable. I need to only look at the major support, because so far based on analysis, I have put or I have wear the bear hat. Okay, so only the whatever is applicable for the bearish market, I will do the further analysis based on that particular, I mean based on this indication of the selling of the stock on that particular day. So what is the immediate supports? So again, I will come back to the chart. Maybe I can go to the weekly time frame just to have a larger, uh, you know, the view of the particular stock, and then I will try to put some of the erased support line as well. Right. So if you look at the historical data, maybe one support line could be this one, because in the past this stock has took the support from here. Maybe I'll just highlight in a different color. And then next support lines should be maybe this one. Okay. And I like still look in the past data if there is any other support line. So this, okay. Maybe some one more support line based on these two, the past data.
Sachin, can you change the line style so that it doesn't get confusing? There is a
Uh,
way to change the line style also, no?
okay. So style means the dashed one or something
Correct,
like.
correct, correct. So we
Okay.
will know all the support line you're drawing are that those dashes. So
Hmm.
little easier.
Yes, definitely. So far, uh, what I can do, maybe the support one, I can use the dashed line.
Yeah. Because otherwise it's full of lines.
Yeah, I think initially there might be a little confusion
Yeah.
when
So you might
I
not have noticed because you're presenting, but it's only you and I are there in call now.
oh, okay.
So even Sapna has dropped off. So
Okay,
I'm
that's
worried that dropping off because it's too complex or what is it like?
I also not sure. Maybe after the maybe tomorrow I will come to know.
Yeah.
So that's okay. Let us continue.
Yeah,
Uh,
let's continue because anyway it's getting recorded and they can
correct.
see it and again see it.
Yeah, yes, yes. So here I have drawn the support line in the green one. Okay. So these support line will act as a target for me as per the checklist. So again, I'm coming back to my normal time frame, which is the daily time frame, and again need to go to function to go on that particular day candle. Okay. So what the decision says that it's a major resistance line. So major resistance lines, sorry, major support line for beer. So as per this historical data analysis, we got a multiple support. So one support could be at what price point as 137. So 137 could be the first value, and that maybe I'll just treat it as a T1. Okay, so it can be treated as target one, and second maybe a T2, and we have one more, that is target 3. Okay.
Mm.
So,
No, I sorry, I did not understand the target.
okay.
See,
So,
we are not even supposed to look at the right one, right? So
no, no,
only
we
on
are
the
not
left.
supposed to. We have only looked at the past
Yeah.
data, and based on the
So
past
in
data, I put,
past, I can understand T1, T2. Where is T3?
huh. So T3, if I go to again the weekly time frame, so based on, see, if you look at this area, so there was a one level where the price took a
Yeah.
support and bounced back and
Yes.
then went further. So based on that, I have marked the T3.
Okay.
Okay. And even in the so not a recent one, even I'm taking the historical data. So here and
Yeah.
here, both the places, based on these two price point or the supports, I just mark
Support,
this
support. Yeah.
support. Yeah, T3. So I'm coming back to again um, the current level. So I got is a three different targets based on these three support line. Okay, and then we can have a price point. So T1, the value of T1 is 137, and that one maybe I can write here. 137 is my first value, and then T2 is, as per this, is around 106, 106, and T3 is somewhere maybe 72. So I got a three target. Major resistance is not applicable. Then stop loss price. So stop loss price is, here we have already identified. So stop loss price is 192. Okay. So whatever the trading system, whatever the value of stop loss we can put, we got that value. Now the target. Target is depending on these three conditions based on the price pattern, or major support for bears and or major resistance for bulls. So we don't have any chart pattern. The chart pattern is not applicable. So in this example, we have only one option, that okay, depend on the major support, we have the target, and the minimum target what we are getting is the T1. T1 is the minimum because it's a falling market. So suppose if we are taking the trade somewhere in this candle, and that price point of this candle, let's see what is the value. Maybe I'll just take, because a daily candle, so I'll take maybe some intermediate price point. So it is around coming 158. So 158, let's say the average price point for that particular stock on that day, and based on that value, what is the minimum target. So minimum target is nothing but the first target, that is T1, and that value we have already noted down here. That was 137. Okay. So 137 is the minimum um, target, and the maximum could be the lowest value, because we are selling at the high price and going to purchase at the lower point. And the maximum value could be 72. So we are taking that particular value from here based on the support and resistance, whatever the three pointers we got out of these three pointers, because it is a bearish market. So whenever the price will fall from this particular price point, it will first touch the target T1. So suppose if we are selling at 190, sorry, 158, we are going to buy at 137 on the first target. Okay. And the maximum one, as per this analysis, it can go up to T3, and the value of T3 is 72. That is how we mention these two values. So similarly, what is the minimum? We need to calculate the reward and risk also. So minimum reward would be how much? It will be um, maybe based on the selling point, which is 192, and the minus minimum target. Okay. So that is we are getting 55, and the maximum target or maximum reward could be the price point that we sold minus the maximum target, that is TT target, and which is 72. Something wrong. So it is 192 minus 72. Yeah. So that is the 120. So 55 in this rate, 55 would be minimum, and 51, sorry, 122 could be the maximum reward. What is the risk? Risk means what is the current cost that we are going to purchase, and the stop loss value. So the current cost, suppose current cost, whatever that particular point, whatever is the current market price. So I'm assuming I just selected some middle point of that particular candle, and it is coming as a 158. Okay. So 158 will be my cost. So the risk will be 158 minus whatever is the resistance. Okay. So minus 34 rupees. That means that 34 rupees, if I'm going to take a one trade, and that the risk is there of 32, sorry, 34 rupees. And a risk and reward ratio, if we need to consider, so it is just, what is the minimum risk reward ratio. So it is basically 34 into 34 or 55. So it is maybe, as of now, it is nearly 1:2. Okay, maximum. And the maximum value. So here I need to take the maximum reward. The maximum reward is coming 120 against the risk of
1 is to
30,
4.
yeah, 34 rupees. So around 1:4. Absolutely. And now, I mean, again, it is the some money calculation of the total capital. So maybe it is again depend on the individual. So somebody is having some, for example, let's say 1 lakh of capital. So it is recommended that, okay, do not invest more than 8 to 20%. So in that way, let's say that, okay, somebody is taking 10,000 for the investment. Okay, on that particular one is top. So how much maximum risk allowed? That is the 2%. So if I calculate 2% of that one into, sorry, um, one,
0.02, no?
one, yeah, 10,000. Sorry. So
Point
2%,
0.02 multiplied by 10.
right. Yeah, so point, sorry, maximum allowed
Uh-huh,
risk.
uh-huh.
No, no.
No, no, wait a minute. Why don't you let it calculate? Why are you calculating?
Okay.
You put that cell reference, no? Is equal to, which column is that? D27 multiplied by 0.02. 2% is 0.02.
Yeah. So this should be the maximum. Yeah, this is maximum risk of 200 is coming. So the number of maximum kind of allowed share, that what it mean that, okay, how much maximum share that we can purchase as per this guideline is. So it will, there is a, okay, now. So 200, so it will be divided, maybe I can say 10,000. Um,
Mhm. Is equal to D27
yeah,
divided by your target price, right? So 137 is minimum target price.
yeah,
So minimum target price is D18.
D18, right.
But are you
Or
taking minimum? Yeah, minimum is D18.
right. Uh,
D18. It's better to put reference, Sachin,
right,
not good to put rate.
correct. So I'll just,
D18. Yeah, we
yeah,
may change it later. No, there may be some
correct,
change.
correct. Yeah. So it is around maybe 72 or 73 shares we can purchase. Right. And similarly, we can, okay. So trade investments, let's say again, maybe depending on that, it will how much will be maximum. Are we planning to purchase?
I have a question here.
Yeah.
Maximum number of allowed. How is it related? Allowed risk is 2%. That is fine.
So there are two ways
Uh,
to calculate that one. One is that we can calculate based on risk percentage. Second one is, I mean, based on my money, how much maximum I can I can purchase. So sometimes it's also happen that, okay, by even by purchasing a lesser number of share, if I can able to touch the risk percentage, in that way also I should be purchasing a less number of shares. So like whoever is basically the conservative calculation.
See, number of shares allowed.
Huh.
Uh,
So number of shares allowed
uh,
is one will be the state, like it that from the total, for my total capital, I will maybe take a 10% aside. So in this example, suppose 1 lakh is my total capital for investment purpose. Sorry, 1 lakh for investment purpose. And then I'm taking 10,000 out of that, okay, sorry, here it is like a investment per trade is the value I should be taking. So it will be equivalent to the value of that particular stock. So that will be nothing but this value. So this is the trade per investment, and the maximum uh, risk, that is the 2% of my uh, total capital. Okay, so one second. That is, let let me delete this one. This is not the right way. Okay. So
No, wait, wait,
uh,
wait.
yeah.
Investment per trade. How did you decide on 137 there?
So that is the that okay. Not 137. What is the basically the cost or the price of that particular stock at that moment? So it was, sorry, 158 rupees. This particular value may vary. So what is the price, at which price on that particular day that particular stock is trading? So I have taken the median value of that day, of the 19th Feb, and that is coming around 158.
Okay.
So that is the giving me the what is the trade for investment is not 137. It should be 158 rupees.
So can you write that investment per trade in bracket? You can write the median value of the day. That is what
So
you mean by.
So it will be not median in a live market when you are planning to purchase the trade. That particular stock might be maybe trading on some value. So for
So you
the
say current value,
current
market
value,
price,
correct. So it will be the market price.
current
Yes,
market price, yeah, market
yeah,
price
market price of that stock.
at that point of time. Okay.
Right.
But that is not investment per trade, isn't it?
Now investment per
You,
trade.
I thought investment per trade is the total
Uh,
amount that you are going to invest,
Total
not the
invest.
mark. This is market price of the stock, no?
So one is we have a separate value where we are saying that, okay, what is the trade investment? So per means for an individual one, how much is the investment is it is costing basically.
Okay, in that case, your total capital should be what you are going to invest for this stock
Uh no, so total correct.
for
So total
particular
capital
trade.
is not for this stock, it is a
No,
total capital what I have. So out of the total capital, I will maybe use my the fund allocation criteria, that is maybe 8 to 20%, and that based on that allocation I will decide that, okay, how much
okay,
investment I need to do or
okay,
I am willing to do for this one.
okay.
Okay, so yes, so now the maximum risk that uh, that is allowed, so that is 2%. 2% means, so we need to first find it I mean decide that, okay, how much um, investments that we are going to do for that particular stock. So there is, I think there's two ways to do. Either we can select or we can keep aside of the fund, maybe 10% or 20%. Let's say that, okay, I'm just taking the 10% of the value, maybe 10,000. So just a calculation purpose I'm taking. So the max, so 2%, um, so based on this, this 10,000, 2% is coming how much? It was like 200 rupees, right? So into 0.02, that is 200. Okay, so 200 is the my maximum risk. Okay, so if you go by that calculation, that means that 34 rupees per share, and the 200, it will maybe maximum, I think, the six individual stock that we can purchase. I mean, we should be purchasing. so that our risk should be less than 2%. Right. So number of maximum share allowed it will be uh, this number of this risk, sorry, the percentage risk divided by the risk per share. So it is coming around 5.88, around 6 years. This part is clear, Manisha ma'am.
No, this is not at all clear.
Okay. So
But we
what?
will leave with it for now.
No,
For now,
it's a very, it's simple. What I say that, okay, suppose this 1 lakh is the total capital. Out of 1 lakh, I have kept 10,000 aside. So if if out of 10,000, if I calculate the maximum risk as per the trading system, we should be taking the 2%, and that 2% of 10,000 is 200 rupees. So
hmm,
we should not be putting more than 200 on risk based on this much capital. Okay,
hmm,
and for one for one individual stock, the risk is 34 rupees.
hmm,
So how much maximum risk we can take? With the maximum risk we can take of maximum to 200 rupees. So number of share I'm calculating based on this risk calculation is
okay,
2,
got it.
200 divided by 34. That is giving me 6 shares.
Okay.
Okay. So now, based on my total capital, I can decide, okay, how much total investment I wanted to do. Maybe again, it will be a, total investment will be number of the the shares. So this is my number of share, negative value. So I can, and then the cost of per uh, you know um, stock, that is 158 rupees, right? So 929 or 1,000 rupee will be my maximum investment at this point of time. Okay, so I will just make it, and then maximum. Sorry.
No, your voice was breaking.
Okay.
So now the trade investment will become 158 multiplied by 6.
Yes, correct. So one. So it will be 158 into 6.
Yeah, but then you are investing only 1,000 rupees. You wanted to invest 10,000 rupees.
So because the as per the system, like, because this is whatever I have done, it is very conservative. Conservative means that if there is any events, assuming that even the completely that this trade is going against us also, the person will be sleeping peacefully, because that
Mm.
is the way, and it is
See,
one.
if I wanted to invest 10,000, then
Mm,
the risk is 200 rupees for 2%.
correct.
But if I'm investing only 1,000 rupees and I lose 200 out of it, I'm losing 20%.
Sorry, ma'am. Sorry, come again.
See, if I'm investing 10,000
Yes,
and I lose 2%, that is 200 rupees,
right,
I'm losing 2%. So, right. But if I'm investing only this row number, trade investment is only 1,000 rupees
right. So
and I'm
is
losing 200,
so
then
again, it will be a percentage, but it will be a 2%. Correct. So it will be a
it's
2%.
20%.
20% of the investment, not your the total capital. Total capital for that particular stock. So I have kept 10,000 for that particular stock. So that on that particular day, I will be
Okay,
only losing 2% of the capital which I kept for that particular stock. That is
okay,
in this example, Tata Motors. So even that particular
okay,
day, my prediction went wrong. Maximum loss I will be having 200. Maybe tomorrow I will do my again fresh study and do it some more time. So every day it will be a conservative, and okay. So what will happen that why the risk and reward, this is important that, so maybe even that somebody is taking the 5 trade and only the one trade is also coming according to his system, he can able to cover the losses of these 3 trades, plus also he can able to make the profits. So that is how
okay,
this
got it.
conservative system is made. Right. So number of okay, so in investment was that, shares, number of share was 6. and then the minimum profit and maximum profit potential. So we can get. So for example, uh, minimum profit, that means it will be 6 into the 6 shares, and into the minimum, whatever that, yes, this is minimum reward. Okay, that is 55.
Why for your personal use when you use this Excel sheet? I'm sure
Sorry.
these all formulas are when you are using this Excel sheet
Mm-hmm.
for. Do you really use it when you decide on trade, or it is just to explain it to us?
See, when I started maybe a year back, that time I was using, but after that, when I learned the more advanced system, I'm not. I mean, nowadays, if you ask me, I'm not using this Excel sheet.
Okay,
This is
but initially
purely for the
it makes
beginner.
sense to use.
Correct. It is definitely, it does make sense to use. Okay. So it's like I mean, when we learn driving first time, we are very conscious about where the clutch gear and
Yes,
which gear we are.
absolutely.
And after that, when we become habitual, we are singing songs or listening songs, we can able to drive. So minimum profit
Yes.
is again number of shares into the minimum profit per share, that is 6 into D20, and the maximum profit would be again um, same 6 shares, sorry, and into the maximum profit, which is 120. Okay. So this is 330 rupees will be the maximum minimum profit, 720 rupees will be the minimum. And similarly, the minimum ROI and maximum ROI we can also calculate depending on the investment. Maybe 1,000. So if the 1,000, for example, let's say the 1,000 rupees, uh, is there any something wrong? Risk involved? Okay. Now these two calculations should be coming down. So a risk involved will be how much? Again, the number of share, that is 6 into uh, 34. This is the maximum. So 204 is the maximum risk involved. Minimum profit is 330 and maximum profit is 720. And ROI, so 1,000 rupees versus 330, round ROI is how much? Maybe nearly uh, 33, more around 30%, we can say. Uh,
My question was that
huh.
apart from the basic values that we have to add, all the other things are calculated.
Mm-hmm.
They're all formula based. So for your personal use, when you're using it a year back,
Mm-hmm.
did you have formula or you always calculated manually the way you are doing right now?
Okay, so to start with, I started using the manually, but in the trading, I mean that in the chart there are some indicators that we can directly use it. So this one will be again, as I said, it's a very conservative, because somebody maybe you know using learning first time and having the minimum like yesterday someone asked how much the minimum capital I should be starting, and I said maybe 10,000 rupees. So let's assume that the person has the 10,000 rupees for investment purpose for a business, right? So for that particular person, it is very very important to count each and every penny, and be ready with all this calculation, and he should be aware that okay, how much money I'm investing and how much money my money is on the stake, on the risk, and if he or she is comfortable with this or not. So once the person will calculate in this way, he will be more peaceful while taking the trade. And if something
Okay.
wrong will happen again, it will be an informed decision rather than it be a shocking. So it will be kind of a organic growth or organic development to the stock market. So if you ask me personally that okay, I mean it is really really, I mean needed, may not be. Maybe somebody by one or two calculation, if he or she is comfortable, he can directly take the trade. But to consider the somebody, I mean the normal audience, it is recommended to okay, use the calculation and know the risk and reward and then take the trade. So
Absolutely. Yeah.
in this example, like based on the risk, I mean we have the, if we look at 1,000 rupees, the 20% is the risk, and the value wise 200, and these are the two rewards. I mean 330 is the minimum reward, 720, so around 30 to 70% is the reward. I mean, considering the investment of 1,000 rupees. Okay, so now to it is once we have the practice of this way, and then it will be matter of just increasing the value. So maybe one trade or two
Oh, that
trade
is
or five.
fine. I know it is very easy to increase value. It's
Correct.
better to start very small because
Yes.
the important thing which we need to learn is to understand the methodology and the process and ability to grasp it, get the data very quickly, put it here, and have the discipline of doing it
Yes.
instead of
Yes.
being overconfident.
Right. Right. So that's the reason, because most of the people when they ask that, okay, I'm a very new, so what I develop is that, okay, let us develop something which is very very basic and really conservative. And once people are kind of little bit practice and they wanted to increase the risk, it will be up to them.
And Sachin, you have to do this in like in real time during the market hours, or you can do it like on the weekend. We do all the analysis and then say, okay, let's buy at this price. Put it in
Huh,
the buy the saying whenever this rate comes, please buy it.
correct. So
Is that a
normally,
possibility?
yeah, yeah. So normally what I mean, what I do the analysis maybe one day in advance, maybe in the night before sleep or maybe early in the morning. That, okay, maybe I'll choose some particular stock and do the analysis and keep that ready. Okay, this is what if that will happen, I will take that risk. So for example, if this is a Tata Motor, if I needed to do something, maybe I'll do the study now, or maybe in the morning, the no when market is not live. So that next day,
How do you
if,
decide then which stock to invest? Because you said we don't need to worry about fundamentals. So how do
correct.
you really decide? Like
So
whether it is Tata Motors or
yeah,
it is
so
Maruti, how would you decide?
see, typical suggestion would be for a trading purpose that select something from the blue chip companies. So blue chip companies is any company which is under maybe the Nifty 50 or Nifty 100 or maybe Nifty
Or
IT.
basically this Unilever, Asian Paint, Infosys, and
Correct,
all.
correct. Yeah, all these are the blue chip companies. So if you look at the top Nifty 50 companies or Nifty 100 companies, all these blue chip companies are there under that. So maybe or
Okay.
simple. I mean, if you can go to and then say, okay, Nifty 50 or 100 list of its companies, it will give you uh, all the
Okay.
lists.
So in these companies is what you trade.
Correct. Typically, in these companies, I trade. Maybe some only very few times, like I select some of the companies, maybe who are doing really good. For example, some defense related company, like one Indian company is there who manufactures the component of the defense, that is Bharat Forge. So maybe when I started, I was not knowing that, but over the time I just learned and something, okay, this is the company. And sometime I study their fundamentals also, what they do, what is their future vision, and based on that I also take the maybe investment, not the trading. Those companies I choose for the investment. Whenever it reaches a mind, I just keep an eye. I know list down in my portfolio, and maybe